Hey, what's up traders? Welcome to a series of videos to help you find the perfect entry and exit points using Fibonacci retracement and extension levels. You will see how these tools can be a simple and effective way for navigating price movements. In this first video of the series, we break down Friday's price movements on ES futures, showcasing how Fibonacci can be applied to find confident entries and exits. And hey, don't forget to share your thoughts, give us a thumbs up, and hit that subscribe button. If you're all about collaborative learning, come join our weekly group discussions every Saturday and connect with us on our free Discord. We're all about sharing trade ideas and helping each other succeed, whether it's through day trading, options, or swing plays. So let's level up our trading game together. And the key thing was to look at was how do we know it was going to turn around and continue to climb? I think someone asked that in the Discord futures chat. It was really, you want to pay attention to these levels here. So I put this example up really to look at this retracement and how you can use that to gauge whether the trend will continue. So let's look like here, we had this big wick. This is the 5-minute chart. We have this big wick here, so that's the open, and then pushed up. And then at some point, if we did an extension on this, we could see it would get to this point, but we have this sell-off now. And so with this sell-off, you could see it come back down, and there wasn't much support at the first fib. So you could maybe scalp this drop here and put a quick short in. And it didn't get any support at the first or the second fib, 0.382. But typically, if I was to short this and scalp this kind of movement, I would take, profits by the 0.5 and not wait for the other two, and then let it bounce around. So you could see it bounced back up, and then it came down to the 0.6. And then that's really the first sign of a lot of buying support, this big wick. You can also look at, the order book and see the imbalance there. But this, just using candlesticks, you can see there's some buying support. But it failed to get back up above this price level. You can see how close it is every time. It's bouncing off that 0.382 every time. I don't know what that price is, but it's probably 436.425-ish. And it did that for about 1 hour. You can see, not 1 hour, sorry, half an hour. So that's kind of indicative of not enough interest at that point, even for the beginning of the day. That was pretty early, 10 o'clock. So from that standpoint, a lot of sellers could see that there wasn't any buying interest, and then that kind of dropped off to this level fairly quickly. And usually when it drops off past the 0.5 with a big big bearish sentiment, you'll see it drop down to this 0.786. So usually you wouldn't see this drop straight down past 0.1 or anything. It almost always has a catch, some buy support here. Some algos have limit orders, either to profit take their shorts from here, or else they're just waiting for that discount, because on the longer time frame, they know it's going to continue, and they're going to pile in with a big iceberger here and just hold that price there. So if we looked at the book map, so this one candle on the 5 minutes, it's pretty telling. It shot right back up. And then in here, it tried to test this next fib going up here, and it failed again. So then it wasn't really a good time to hold and continue. You might want to take this kind of ride going up a little bit. And that's kind of a really quick trade. That's 5 minutes in and out. And then you want to wait again for this retest of these discount windows. So I call this the discount window, because relative to this price range at the open, these are the two lower fibs before we get a real sell-off. So you want to see how it reacts now at the 0.618, and if it falls down, typically if it falls back down to the 0.768 again, it's likely going to not have much more buy support, and then you can get ready for a premium so that you can short. But right here, we see this 0.618 find a huge engulfing candle. It pushes back up. That's followed up by another support right here at the 0.5, and it pushes it right back up. So these three pieces here, these three candles show us, boom, it sold off hard, but it found support, and boom, it found a lot of support to push back up. And that's only 4 or 5 points, but that's quite a big swing in 5-10 minutes. You have down 8 points, up 5 points, so that's 13 points quickly. So that's really a quick indication, a lot of volume of buyers coming in. And then this piece here, this 0.5 hold was really good. So I think if you saw this I would say I didn't trade this, but I would have said, okay, this is a good time to take it long here, rather than this early entry, which you could do for a scalp as well. But this big position here on the fibs, if I'm just trading fibs alone, I'd be comfortable saying there's some bullish activity on this short-term range. Now, if you want to look at how far it's going to go up for the day, you need to kind of evaluate the higher time frame as well. So you can pull up the chart for that. But just looking at this here, you could do an expansion of this prior high, this blue arrow here, and this prior, this recent low, or the lower low here, as your new range, from which you want to analyze and guess how far it's going to go up. And so this is sort of the max. If you're using the golden ratio, the sequence again, 1.618. If you're confident with just this analysis alone, then great. But I think you want to pull in other pieces of information. But from that, you can be comfortable holding the 70 here all the way to 84. And so some of you might have done that. Then you can just ignore all this other blips. You can also, continue to put retracements on every leg here to see if it fails at the 0.786 or the 0.618 as a way to say, is this continuing? So what I would do is I continue to put on fib retracements every time we have a new lower low, just to be sure. So you can do this red box every time you see this new lower low, as a way to, evaluate whether the trend will continue. And this would be your kind of local higher time frame. You want to gauge of whether this down here was actually an exhaustion. So just looking at the Camarilla pivot points, we see it hit the S4. And just using Camarilla pivot points, usually when it hits an S4 on a regular day without any negative news, typically you'll see some reversal back to at least S3. Not always, but that's a typical day where you want to have mean reversion. But if we look at using a fib extension on this prior range, so I'm going to pull back all the way to this Thursday overnight low and this Thursday morning high. I'm going to put this as the new fib expansion or extension. So it's roughly there. I'm just going to try to put it exactly. So the high here and the low there. And so you could see, it doesn't go all the way to the 1.618, but a lot of times you'll see the pivots when they line up with another pivot, 141. I mean, these values line up for mathematical reasons. It's probably based fairly similar values. I have to pull that up to see. And then if we look at the FVGs, so I usually plot the FVGs every week. I kind of create all these lines. Here I have a blue turquoise line, and if I show them all, you'll see like a million lines. But this aqua blue line here was from way back in, I'm going to go to the daily range now. Way back in June the 12th, June the 12th, there was a big FVG. So it shot up, it had a big squeeze, and it was a really big imbalance. So likely there was a lot of new buyers who bought in. So there's a lot of sell side liquidity here, basically stops that would get stopped out. And so from that standpoint, once this came down and hit this, it was a big massive amount of sellers, and the selling demand really just dropped off after that, right? The selling demand dropped off because then you've sold a lot. So all the sellers have already taken up their position. There's no more selling interest at that point. So it's not easy to tell whether it's going to continue and pivot. So you can do that exercise that we just did for the fib retracement right here. So I'm going to pull into this box now. So this is the 5-minute chart, and this is that first reversal into this zone here. There's one up here as well at the 1.2. So we can put another fib on that, but this is the very first, or the lowest one. And I'm using the new low here, and this high here. And you can see it does come all the way back down to the next, it doesn't find any, how am I going to say this? It doesn't find any buy support. Maybe on the 3 minutes, it's going to be easier. So 3-minute fib retracement on this little range here, just before the 1.4, so you see going up. How do we know that's going to continue to going up? Well, initially it doesn't show any sign. So we look again. We'll draw a line here. So we do the same exercise that we just did earlier. We look, it came straight down, no support here at the 0.23. No support here at the 0.32. There's some sort of jumping around and it doesn't go back up again. And this is the 3-minute, these are 3-minute candles. So that's a lot of time still. It's kind of not been able to find continuation. So again, you could try to short this position here and write it down to the 0.618 discount window. So I'm calling this discount window again. And usually you want to get out here because you'll see a bounce at the 0.786. Now this is the pre-market, like this is right here, it says 927, this is 930. So this was probably a bit of unusual volume right here. If I go to 1 minute, maybe we would see that a little bit better. Time of day, like we were saying earlier, that matters. So just before the market starts, that 15 minutes is usually a bit higher volatility. So I'm going to pull back and look at ATR and ADX and CMF again. You can see kind of this big divergence all of a sudden right here and right here. So it's kind of flat all pre-market, and all of a sudden you have this huge punch. So typically I don't really try to hold the position unless I have a reason to right at the beginning, like the first 30 minutes or first 10 minutes, because I know there's going to be some big fluctuation. And it's hard to tell when it's going to happen, but here it happened 3 minutes, 4 minutes before. And so it really just had this big drop off right here. So it's kind of dangerous. But normally you would see this was probably indicative of a support buy here at 0.786. But the fact that it didn't happen here, like let's say you were trading the 30-second chart and it just melted through here. When it melts to the 786, or if on the opposite side it punches above 0.786, usually it will go to that premium area. So you can see here it just went straight to that area. But because this is a pre-market volume, it didn't need much time. It only needed one candle here. A lot of volume came in right here. And then quickly it reversed, right? BZ says, yep, thanks for recording. Yeah, I had it recorded. I'll try to edit it, upload it on YouTube or whatever. So happy to get your comments on it after. So that's, yep, sorry, David, you were going to say something?
That's okay. You use the lines there, kind of, they're typical on your charts, with the arrows, and they tend to kind of look like trend lines, but I don't think that those really are trend lines. I think those are much more directional, or are they? And would you look at that and say, yeah, that really kind of is both directional and it serves as a trend line? Or kind of, like if you go back like 2 charts, you had a couple of lines that overlapped and they pointed up kind of the bottom of a
was it this chart here? Yeah.
Okay, that's it. So would you look at those as trend lines and directional, or would you just say those are really kind of illustrations of
yeah, no, it's more of an illustrative purpose. It's not necessarily a trend. It's just a general sense direction is going back up.
Yeah. Okay, so that was my interest, because a lot of people, are like, oh, it's sort of like this trend line or a channel or something like that.
Yeah.
I don't really hear from you much. I think that you are much more about kind of the fib levels.
Right. I wouldn't be as comfortable to use the word channels or trend line, because that's not really what I'm looking for. I'm not looking for the specific trend long term, but really just a change in direction locally at that time frame, or that small time frame here.
Yeah, at the top one, I think was especially the one that gave it away. It's like, okay, that's
yeah, it's not going straight up. It's just saying there's some movement right here, but the actual trend and the angle is not precise. Right. I mean, sometimes I'll put a trend line if it's like a wedge, for instance.
Yeah, you talked about that last week.
Yeah.
There was an ascending.
Sometimes we'll see a really sharp wedge. I think that happened maybe midday or mid-morning here. So if I put a line here, and I'll just get rid of everything else here. I'm not even sure if that's quite a specific trend line, but you do see almost a bounce at all the points, but there is a bit of a deviation right here. But it's usually easier to see when it's coming back off a big sell-off. Yeah, so that's almost like a trend line if I just pull it back to the 3-minute here. But
subjective than the fibs.
Right.
Fibs have their own level of of subjectivity, but
right.
the
So
trend lines
I find those trend lines hard to gauge where to get an entry and what it's providing, like what information it's providing. Like how do you tell where the top is, and so that's not something I'm as familiar with in terms of terminology. But some people will trade this wedge going up, and they'll buy these dips every time and sell. But you have to have enough local highs and local lows to form this channel, and a lot of times you might not have that consistent pattern, and it's quite kind of difficult, regardless of if you're using the fibs or the channels to get in at this point here when it's quite high up here. So I think the wider time frame, yeah, here it is, to gauge how far it's going to go up. And so if I'm using this low again and this pre-market or this opening high, a lot of these peaks are already way past, the 0.6 retracement. So at this point, it's hard to suggest, an entry because you're almost at the peak. So I saw this come down and I didn't take advantage of this big sell-off. But usually when you see that kind of aggressive sell-off, there's going to be some retracement, right? So if we just do a fib retracement on that leg, that trend up, it's going to do it from here. So I probably had this going, this kind of fib for the day, and I saw it come down to the 0.5. And the 50%, it's not a fib, but the 50% retracement is a typical area for a big rebound for one of these big uptrends or big downtrends. Like you'll see it almost always come back 50% after a few hours of trading. And so I saw this bounce right here, this big wick, and I saw this VWAP and this big candle. And so it was kind of an indication that perhaps we'll continue to see some progression up, at least one fib back up, at least two. So if we did another fib, just another retracement on that retracement. So I call this a secondary retracement when there is good support. It almost always comes back up at least to the 0.618. It's kind of bounce down, bounce up. So again, I'm going to draw a line, but this is not a trend. And then usually you get 0.5, and then if you're feeling like it's other information showing that it's bullish, then it's going to continue going up. So because of the day, I saw this exhaustion here at S4, and if you look at the order book on the book map that we all use, there was a lot of liquidity right here from the 85 to the 90 or 95. It was a huge cloud, not a lot below. It was just kind of some of these FEGs here, but a lot of stuff up here from the sell-off, I guess from Thursday, and it seemed like there was only a few resistance bands, and maybe we can pull that book map together. But there was something at the 83 I remember seeing, and something at the 82, and those ones were related to this one sell-off here, this profit taker or this new short entry. And if I just put another box, because I have a lot of boxes, and I'm going to code it in orange. So that was really for that afternoon or yesterday, or sorry, yeah, that was yesterday. That's really where for an hour or two, it wasn't clear whether or not we would bust through or continue to go down, right? And what I usually look for on the fib expansion is, again, I look at these tests of these key areas. So it broke past the 0.32. You know what? I'll put the 0.23 as well. So typically, if you see the price come above this retracement above the 0.32, it's a pretty solid sign that yes, we'll continue past all the way to the 0.618. So it's a good, and a lot of times I'm trying to show that out on the YouTube chat or whatever. These are free points, basically like 4 points up. It's almost guaranteed. And then you can just get out and then let the market decide what happens next. But this kind of bounce from here is always a fairly easy play, and that's probably the highest percentage play right there, this bounce. And then after that, it gets choppy. You want to wait. New shorts waiting for this short discount window right here. So the short discount window is from here. Sorry, a lot of arrows. So I don't know if you guys see that. Yeah.
Hey, Lot, so do you view 0.382 to
Yep.
0.618 sort of as a balance range?
Yeah.
Yeah.
Sorry. Yeah, when I see it come back down, so usually I'll buy this kind of move on this. Like this is we explained why I bought this move, and then I'll take profit because I know there's going to be a lot of algos who will just apply pressure because they're trying to defend their short here. This is probably some big seller who just positioned a new short, and they want to take. They probably took some of the profit. That's why this went up so much. But they might still have some in there defending, or there might be other people defending. So usually, this is where you'll see a big block of liquidity above, and then you'll see on the order books some sort of block here. That's a new seller, and that takes some time for it to break down. So then it's an opportunity on a local window. You have that, and then you have the VFAP to 2 points. This is sort of like the local support now. So it's not going to come down below the 2.38, sorry, 2.236 fairly easily. Because this was a big buy support, likely there's going to be more of the similar type of buyers waiting here at the VWAP. So you could take advantage of that and either wait for it to double bounce. I don't know if it was a double bounce in 1 minute, or you can wait for that surge across the 382. And when it surges across 382, it's really indicative of, continuation of that upwards movement. And so yes, you can get in here at the 74, and you can be confident that it's going to get to this 78. You can be confident that if it bounces here and it crosses here, you can scalp this for 4 points. And the reason why you can be confident of that is it's already tested this point, or the 76, a few times, and it's kind of gone up, kind of gone down. But now you're going to take out these stops that were just entered here fairly easily when there's this big candle coming in. So this is kind of the stop avalanche or stop chain that gets hit. So you can look for these types of reversals, and then it comes back down for another test at this 0.23 or the 0.32. That's when you see this bounce, this local bounce. It's a good channel to try to get into. Now this is in context of looking at the full day, right? We just said we had this daily exhaustion. It's tested 2 times. The fib retracements have been bullish, and you have another bullish confirmation here. So this one here is probably the most confident trade I would say that day. This is 100%. It's going to go up.
Oh wow!
Yeah.
So it is. All right. The context is everything.
Yeah.
And so the way to view, I guess another way to view that 0.382 to 0.618 is almost like a LVN, sort of a low resistance zone for whatever your bias is, whatever you're seeing in terms of overall directional bias, right? With the right context in terms of price action, right? Kind of retest, VWAP support at fair value gap or whatever you want. I mean, there's a laundry list of things you can do, but
right.
It's an area where price could move very quickly and in the buyer's direction if you have the right preconditions.
Yes, I think it happened again at the end of the day. So I'm just going to get rid of some of this and show you how it happened again at the end of the day here. So I'm just using the 0 at this triple top, and then the 1 at that bounce at the bottom. I noticed again it came down and there was some buy support at this discount. So forgive me, I'm going to add another box right here. There's it held up really nicely, just above the IP high, just above the VWAP, just at the 0.618. So everything kind of lined up there, and I think on it flew up. So I think this is another case where you see this come down. There's some buy support. And now again, you can draw another fib going up. And not sure the 3 minute always shows it, but maybe the 1 minute in this case, because the candles get quite big. So this is a case here where it does come back down, but you see it come down a little bit more than 236. So here it didn't respect the level exactly. It came down by 1.5 points more. But quickly it shot up and it gobbled up this. These are FVGs here. So this one filled up really quickly. And then it came up and it pushed up quickly. You see this 0.32. I'm not sure why the fonts are so tiny. Put a big one here. So you can see a similar pattern again. It came up. In this case, the bounce was fairly small the first time. So you could have, if you were really quick, you could have got these 6 points. And then you wait for this kind of bounce back down and look for support. So we found support. The support came back up a little bit more now. And here's where I took another entry, I think, or just before it, because I saw this blast through the FVG. So what was key here was this particular FVG. Normally you might see it tap the mean and then come back down. So a lot of times you'll see it do this kind of thing. I'll tap it or I'll tap the bottom and that's it. It's going to continue to go back. You see this tap here. But it broke through and then it found more and more buying. So what happened here, and especially useful, was to look and compare against the L2 book. A lot of the stops that were here were getting triggered. This big FVG here. Oops. This big guy here. They got out of the way, so they bought back quickly, and there was a defender that was basically a big block of sellers that got out, and it just disappeared off the order book. And that's when you knew this is gonna, probably retest that high here. There's a lot of buy support in the sense of all these shorts started to get out of the way, and they didn't defend their price anymore. So this is, you can see it test a few times here. I'm just gonna pull back. And then you can see this is the midpoint of the pre-market IB range. And again, I found a lot of support. So you had plenty of time here. It was about 20 minutes. The only problem was it was at the end of the day, right? A lot of times I wouldn't advise someone to trade during that volatility because a lot of people settle and they just, that kind of screws up the volume. But if we look at our expansion, we never did fully expand to that day range that we had estimated earlier, so not the 90s and 93s. And eventually it got there. So that's basically how you can find these kind of freebies. This right here is a freebie right there.